take more time off. That's good, Frank. All right, good afternoon, everyone. Today is January 2nd, 2013. This is the first day that we've had in the live trading room in 2013. Let me go over the results. We had 4 ticks profit on crude oil, and we're actually long crude right now. But we had 4 ticks profit on crude oil, and 31 ticks profit on gold, 2 ticks profit on the NASDAQ, 7 ticks profit on the Russell, and 5 ticks profit on the soybeans. That is how our morning ended. Okay, I'll go over each one of those markets one at a time here. And let's see. Well, here's crude oil. The crude DOM has 5 ticks because I was just in a trade and I had my stop at +1 tick. Here's gold, 31 ticks. The NQ, 2 ticks. Soybeans, 5 ticks. And the Russell, 7 ticks. All right. Those were the trades from this morning. Now, let's go through them all. All right, where do I start? I'll start with the NQ. That's what I started trading this morning anyway. I started the morning out with the NQ, and my first trade of 2013 was a loss. Right here. I lost this trade. I went short here. Now let me just go over the setup to start with, okay? I'll start way over here. I missed a few trades here on the way down. But what you look for is for the MA1, which is this blue and red line right in here, blue and red, to cross down below the BBC, which is the green line. You get that cross down, and then you anticipate price is going to come back up toward the BBC, and you're going to have divergence down here on the slingshot. If you get all that coming together and you get a down close off of the BBC, then you can short that down close. Now we did have some divergence here. When I say divergence, I mean the green line is moving away from the cycle portion of the slingshot. All right, in this case, the cycle portion was blue, so I would not have taken the down close because the cycle portion was blue. I'd like it to be red like this. When I divergence like this right here, I like to see. Or like this right over here. The down close over here was something you could have traded. I missed it, but that was a trade right in there. What to do instead of that is draw a trend line up the bottoms like that until it hits the BBC or until it closes below the trend line. In this case, it hit the BBC there and it closed below the trend line on the next bar, so you could have shorted right in there, anticipating that this green line was going to work its way down into the cycle, which it did over here. All right, that's what you look for. Now, there was another opportunity in here, the same thing. Price pulled back, it closed below that trend line. There was an opportunity to short, anticipating the green line was going to work its way down into the cycle, which it did. I did it again right over here. The divergence was all messed up. The green line wasn't going to work. None of that was going to work. But I took it over here anticipating that it would get down to like right over here somewhere. And it didn't. It just stopped me out. All right. The next trade, though, in the opposite direction, the same thing happened. I didn't draw the trend line on there because it was happening pretty quick. But I needed the up close above that trend line. And that's what I took right there. All right. Anticipating that the green line was going to work its way up into the cycle, and it did. And so I took profit there. I missed that one there. I took another one over here. That's what got me positive on the NQ on the morning. And that was it. The same thing happened over and over and over and over and over again here on the NQ. All right, I can draw a whole bunch of them, but I'm going to go over the same thing on other markets, so I'll just get to it on other markets. Okay. The ES, now at the start of the day on the 10,000 contract, the ES started out right up in here, and it was trading pretty sideways right up in here. I had said, well, right up in here is where it started, and I had said I think it's going to work its way down to the BBC. It did that. It got down into the weekly trading zone. It bounced off the zone, came back to the BBC, then back to the zone, and now it's kind of stuck at the zone. All right. I did show something this morning with options. Here, let me show you, because it's Wednesday, but it's our first day trading this week. But here's something worth noting. This morning I took a screenshot of this when I opened the room up this morning. Not at 9:30, but earlier than 9:30. I don't remember exactly what time it was, but the 1440 calls and puts, what I was suggesting is buy a call and a put. The calls were at 1650 and the puts were at 19.5. Okay. Currently, let me find the option chain here. During the day they were off quite a bit, but the puts are now at 1350 and the calls are, well, the calls are still at 19.5. But during the day when prices were up higher, the calls were up at 22 bucks and the puts were down at 12. So you would have made money on the calls, you would have lost some money on the puts, but my reason for saying buy both is because I think as this whole thing, this whole cliff deal unfolds, you're going to see prices change dramatically over the next week or 2 weeks. Those options expire on the 18th, but I think over the next week or two you're going to see a big change, big fluctuation in price. And so you may be able to take advantage of both sides of the market there. All right. That said, we were stuck at the weekly trading zone, this being our highest weekly trading zone of the week. I'm anticipating by the end of the week it's going to be significantly lower. All right. We'll see. You know, with all the things that are pushing the market around right now, it could go quite a bit higher before it comes back down. Let's jump over to the natural gas. I'll show you on natural gas. This is the reason I have natural gas up today. The gas actually comes out tomorrow. The news event, the gas inventories comes out tomorrow, but there was this flash crash that Dwayne was talking about, and I just wanted to take a look at it and see where we would have had an entry opportunity. Right in here, there was a 15-second window of opportunity right in there where you could have put your short on. And if you didn't have a target on that thing, let's see, you would have been shorting right here on the down close at 267, and what time was that? That was at 9 o'clock exactly. And 10 minutes and 42 seconds later, it had dropped 70 cents. That's 70 times 60, right? I believe that's right. 70 times 60? Yeah, I believe that's right. A significant amount of money could have been made right there in a very short amount of time. I just wanted to point that out. Now, during the actual morning, there was plenty of trading, the same exact stuff, but I didn't look at the natural gas at all this morning. So I'm going to stick to the markets that I did look at, because I did look at a bunch of them. Let's jump over here to soybeans. All right, the soybeans opened up at 10:30, and when they opened up at 10:30, right in here, there was an opportunity, well, right at 10:30, there was an opportunity to short. The first one was right there on the down close. Right in here, all right, was an opportunity to short. The next opportunity was a close down below this trend line, right there. All right, there was another one right over here on a close below that trend line. Right there, I didn't draw the trend line, but actually, we had, yeah, the close below that trend line. I did draw the trend line. Right here, the close below that trend line. I missed that one. I finally got into one of these trades right here. This all took 9 minutes, and I was doing something else, trading somewhere else at that time. But this one finally happened right down here, and I did short this one, and I told the people in the room about it as well. If you shorted over here where I did, great. If you wanted to wait until it closed down below this second trend line right here, you could have gotten it again right here at the same price. Same thing, it dropped quite a bit. I only got 5 ticks out of it. I moved my stop down too quickly. There was another opportunity here where it pulled back up, tested the BBC, and gave a down close. We did have some bearish divergence there, but we had blue on the cycle, so you needed that close below the trend line. All right, when you get that close there, then you can jump in and short it, anticipating that the green line is going to work its way into the cycle, and it did. When this one right here happened, I think it was this one, or maybe it was this one. One of these, when they happened, I pointed out that the cycle portion was moving up, and this was pretty close to being in the cycle, so I didn't know how much room it was going to have in it. I didn't take the trade. I even suggested that if you did take the trade, you might want to be really quick with your stop. You can see it really ran down. Once everything reset down here as far as the cycle goes in the slingshot, there was another opportunity right in here where a short down below that trend line. You would have watched the green line expecting it to get down into the cycle, which it did. And you can see there are just a bunch more trades. I mean, they're still happening right now. But the same thing over and over and over again, using the trend lines, using the slingshot. You could have easily made, a bunch of cents there on the soybeans. Now, 1 cent on the soybeans, for those of you who don't know, 1 cent on the soybeans is equivalent of 1 point on the ES. Okay, I made 5 on the soybeans. Let's jump over to gold. I was up more than anything else. I was up on gold this morning, but I only took 1 trade. I don't know why I have that random thing in there. Oh, that was at the end of the morning session. I was saying an up close in here should work its way up into the cycle, but it drew down too much. That would have stopped you out if you did take that. But that was after the morning session closed. Now, the 1 trade that I took in gold this morning was right here. All right, right here for 31 ticks. I got long here, and I told everyone I was buying 1690.1 after the up close above the trend line. We had the bullish divergence to support it. The green line was moving up into the cycle, but it was moving so quickly that I was just trailing my stop, and I was actually trailing it by quite a bit. It moved 10 ticks, and I'd trail it up to break even, and it moved another 10 ticks, and I'd trail it to plus 10 ticks, and it moved another 10 ticks, and I trailed it plus 10 ticks, and then it moved another 10 ticks, and I trailed it right up behind the market. And that's where it took me out, right over here. Okay. It kept going up, you can see after that, but it's the same exact stuff. It's a different market, but it's still a 4-tick range chart. You get your bullish cross, it attempts to pull back to the BBC. It doesn't hit the BBC because there's so much momentum, so you close above that trend line, you jump in there and take profit. There was another opportunity there on the long side, here on the short side. Right here, this would have been the down close on the short side. Right here we wouldn't have done it because the black got up in there. Here would have been the down close on the short side. All right, I wasn't looking at the gold as much anymore because I was up 31 ticks on it. I was looking at other markets more than the gold at this point. But that pretty much brings us into the close of the morning session. Okay. Now, that was gold. We were up 31 ticks on gold. We'll go to the Russell. I tried to take a couple of trades on the Russell. I think I only filled on 1 though. All right. In the morning session, after the open, there was an opportunity to short the Russell right over here. But that moved down. An opportunity to get long in here. After the bullish cross, the attempt for a pullback to the BBC, there was too much momentum for it. It gave the close up right here. Right there would have been the spot to enter, and it moved up. There was another spot right there. There were more spots on the way up, right in here. Okay. The one that I did take though was over here where it gave a down close. We had some bearish divergence and it gave a down close over here. Now I was in the middle of doing a bunch of things. I think I was sending an email to a whole bunch of guys that asked for my layout at the time. So I had put the trade on, and it went sideways a little bit. And once it closed down below the MA1 right here, and it actually got to moving down a little bit, I said I'm putting my stop at break even. And as soon as I put it at break even, I had also put a target in at the swing low here, 1 tick above the swing low. I had put a target in because I was going off to do other things and I wasn't going to pay attention to it. And as soon as I moved my stop to break even, it nailed my target, and it took me out with plus 7 ticks right there. There were more opportunities in here. I got pretty choppy right in here. Depending how you did this one right here, the down close, it was only, I think I had said when this happened, I think I had said it's in a position for a pullback. The down close right here only had 1 tick to the next pivot. And the green line was just about down into the cycle. Okay, that is something that I covered in detail in the last partners meeting. And I try to cover it in the live trading room as well, just so you guys can use a slingshot to identify range and what to expect from a trade. It got pretty choppy in here. I stopped looking at it, and this is where we are now. We have some bearish divergence. Testing the BBC, a down close from the BBC right here would be something you could short if you wanted to. So I've done gold, the Russell, the NQ, the ES. I didn't do the ES much. There were a couple of opportunities this morning on the ES. Let's see. I think I only really pointed out. I pointed out this one right here on the long side and up close right there. There wasn't much movement up to the prior swing. There was 2 ticks to the prior swing. and the green line was almost up into the cycle already, so it wasn't a great opportunity. There was a shorting opportunity over here. You see we had the bearish divergence and the down close below the trend line off the BBC. That's usually a pretty good opportunity right there, and it went right down to the weekly trading zone, which is right in here. All right, that's where it is now. Okay, it's stuck inside there, inside the weekly trading zone. Now let's see over here on the crude oil. I've done soybeans, NQ, ES. I didn't do YM, but I didn't trade YM. That. This is good. This will be my last one. Okay, if anybody's got any questions, just type them in, and I'll be happy to answer them. All right, now on the crude, let's see. We had a couple of trades in here on the crude. There was a ton of opportunity, but I only actually filled on a couple of trades. Okay, we had this one right here. All right, tested the BBC, gave the down close, and moved down pretty well. This one over here, the same exact thing. Now it's a different market. It's a different market, guys, but what I want everyone to take away from this is that we are doing the same exact thing over and over and over and over again. James, I'm your audio alert. We don't have any audio alerts when they're about to happen. No. It's the same thing though. What I recommend is you focus on one market. Okay, I don't recommend you jump around to 8 different markets like this. I would say if you like crude oil, you like the volatility in crude, and you have an account that can handle the margins for crude, then trade crude. If you like the ES or the NQ or the YM, because it's the same stuff everywhere. The soybeans. If you like the hours of the soybeans, because there's usually 1.5 hours of the day when the soybeans are active. In the morning session anyway. Then trade that. Mike G, I'd trade, well, it's just by looking at the results. Gold and crude oil probably more than anything else, but soybeans and the Russell, just by looking at results, it's gold, crude oil, and the soybeans Russell together are all up there as far as the results go. The markets that I trade the most. Okay. And sorry, I was going through the trades here. All right, I missed this one right here. Now it's the same thing. You see it pulled back up, tested the BBC, and gave a down close with some bearish divergence. Now there was a little blue on the cycle, so you wanted to wait until you got the down close. Okay. And over here, the up close. All right, once you get the up close, it went up. Over here, the down close. Over here, the up close. I actually took this trade and I took a break even on it. There was another opportunity that followed up right behind it. I didn't take that. There were all these things right here. Now you see me, I highlighted all these things, all these moves here where you could have taken trades. I'm not skipping the trades because I want to skip them. I'm missing the trades because I'm doing a whole bunch of other things. Okay, but if you were focused on this, let's just look at this. Let's just look at this one period right here. Okay. Let's say this one right here. Let's say you have a target, you use an 8-point bracket, 8-tick bracket, we'll say. Okay. This one right here, the entry would have been 93.38. It dropped down to 93.32, and it pulled back up, minus 8 ticks. This one right here, my entry 93.56. It dropped down to 93.49. Then it moved up to 65, plus 8 ticks. Your break even right there. This one right here, 48 down to 38, plus 8 ticks. This one right here, 44. Well, that would be plus 8 ticks. So you're plus 16 ticks, plus 24 ticks. This right here, 27 down to 19, plus 32 ticks. If you shorted right in here, it would have been a down close right here. So it would be you're back to 24 ticks, 32 ticks, 40 ticks, 48 ticks right here. Just on what you see right here. All right. So if you were focused on a single market, right here there's 48 ticks with an 8-tick bracket on. Okay? That's with this losing trade, and there was one other losing trade in here. In that one, what is that, an hour? Yeah, in that 1 hour. That's $480 a contract. Now, we ended the morning session at plus $492.50 a contract. But, no, I don't think I took this many trades, actually, altogether. I traded 5 markets, and I'm not sure I took, this is what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I don't know that I took 11 trades this morning. But the opportunity is there. I recommend you focus on a single market. I mean, you can see in here it happened over and over again, the same thing over and over again. Crude oil is a really volatile market. That's why the margins are as high as they are. But if you were to look at, any of the markets, they're similar. They move around like this, and they have the same sort of action, price action. And once you can identify the price action and use our indicators to identify great entry points with minimal drawdown, then it's pretty straightforward. It may take you a week or so. It may be a little overwhelming your first day in the live trading room. It may take you a week or so to even to understand where I'm looking for the trades and all that. But I try to do as much planning as possible when a trade is coming up. I'll tell you, well, if we get an up close on this bar, and on your first day in the live trading room, you may be saying, what market's he looking at? but I'll say, if I get an up close on gold, or if I, and I might not even have the gold chart showing, and I'd say if I get an up close on the current gold bar, my assumption is that if you're interested in gold, you're looking at the gold chart, whether I'm showing it or not. If you're interested in gold, you have your own gold chart you're looking at. And I say if you get an up close on the current bar on gold, that's an opportunity to get long. And then when it happens, I would bring the gold chart over, and I would say, there it is. I'm getting long at 1690.1. Because, yeah, Bert, I am. I would then look at the actual price, the current bar that's painting, like in this particular case right here. In this particular case, 89.7. I'd say the low of the bar is 89.7. That means the high of the bar is going to be 1690.1. It's going to be 4 ticks higher than 89.7. I'm going to try to get long at 1690.1, so I'd put my order on there at 1690.1 as soon as I can. Okay, I'll send it off, Bert. 1690.1, and that's what I did. I put my order in there, got long at 1690.1. As soon as the bar closed, you see it drew down 1 tick to 1690. Yeah, I will. And it ran up. Okay. That's how I try to do it for everybody in the live trading room. For whatever market is moving, and I see the setups coming together, that's what I try to do. All right. Like right now, for instance, we just had a pullback down to the BBC after a bullish cross. We had an up close and we have bullish divergence. So the spot to get long on this would have been right here on this up close. All right. Now what you anticipate happening when you have divergence like this is for the green line to work its way up into the cycle. Price action is going to make that happen. And that's what's just happened right here. All right. So I would have said, okay, you can get long right here, or if you want to wait, you get long on a close above the trend line. The better spot was right here, right off the BBC with the up close, and I would have said you can anticipate it getting at least to the prior swing because you had the bullish divergence. All right, and you can see it's gone through it. Now it's at a position where it should have a pullback down to the BBC. Right now, we should pull back down to the BBC, and the green line should diverge from the cycle portion again and give you some range, give you an opportunity to get long again. All right, that's it. It happens over and over and over again every single day. All right. That's it, guys. I'm gonna wrap up my recording right here. If you have not taken a trial with us, go to www.cfrn.net/apply. Sign up for the free trial. If you Mike, I'll send you some information. If you have taken the free trial with us, and you want to become a partner, then send me an email at support@cfrn.net, and I will tell you what it takes to become a partner. And for everybody out there that's a partner or that's on the free trial, there's a partners meeting tomorrow night, 9 p.m. Eastern Time. All right, reminder about the partners meeting tomorrow night, 9 p.m. Eastern Time. Okay. Wait, there was one other question over here. One question was, when I mentioned being a partner, what exactly does that mean? That means you get access to our live trading room. You get access to our swing trades. You get access to our members area. You get access to our partners meetings. You get access to the indicators. You get access to Dwayne and I for one-on-one if you want. You get all this stuff when you become a partner. Okay. So if you're interested in becoming a partner, then just let us know. You got to send an email to support@cfrn.net. There was another question: what are the best times to trade the soybeans? Well, that's kind of an interesting question. It depends how active you want to trade. The soybean volume, the majority of the volume, if you throw it on there, the majority of the volume is going to be in the first hour or so. Here, let me throw it on there. You can see there's no volume right in here, but the first hour or so is when there's the most volume right in here. Okay, that's when we were trading it the most actively this morning. There is volume overnight. You're not going to see it right here because of the holiday, but there is volume and movement at night. But I think one of our partners had said you have to be a fisherman to do that, because you have to have the patience to just stick with it. Throw the line in the water and stick with it, and wait for it. But at night, usually when the Asian markets open up and the European markets open up, there's movement. The Asian markets have, because they're a huge importer of soybeans, they usually have a pretty big effect on the market. Okay. That, I believe, answers all the questions. All right. With that, I am going to stop the recording. Partners meeting tomorrow night, www.cfrn.net/apply for the free trial.